First up, we have the brilliant Callum Sillars. He's from Ampere Analysis. He's going to be kicking it off for us with a landscape overview of the AV ecosystem. So please put your hands together and welcome Callum to the stage.
Thank you. Do I need that?
Just keep going.
Keep going. Okay. There we are. That's my face. Okay, so today I'm going to be talking to you about megatrends and growth areas within the audiovisual sector. So over the past decade, one of the major trends that we've been seeing is the decline in linear broadcast viewership. So the graph we're seeing here is essentially, we survey a panel of 2,000 people each quarter, and this is in the UK, and we ask them essentially how much broadcast TV do they think they've been watching. And when we go back to Q1 2017, we can see this sits at just over 100 minutes of view time. And if we fast forward through to the current day in 2023, we can see this sits just below an hour. So that's a significant decline, and that's across services such as BBC, ITV, and Channel 4. Now, this isn't just a decline in viewership, but it also means that TV no longer has programs that deliver consistently the same mass audiences that were being delivered before. So TV really, it's had a diminishing impact on being able to reach every home in the country. Now, part of this isn't just exclusive to the UK. Obviously, online video has become more and more important across the world. And a key part of that is subscription video on-demand services. So Netflix, Amazon Prime Video, Disney Plus, etc. And what we can see is what was previously a reasonably small portion of viewing at maybe around half an hour has grown quite dramatically over the past 5 years, and consumers now believe they're watching more subscription video on demand content than they're watching broadcast TV. So we've passed an inflection point in the last year, which is quite important. Now, a lot of this growth means, this growth in the SVOD sector definitely means there's a lot more platforms looking to launch within the market, basically to try and capitalize on this growth itself. And what that means is we're starting to approach this issue, which is fragmentation of viewership. And it's not just these SVOD, subscription video on demand services. We also have our broadcast VOD services. So this would be BBC iPlayer, All4, ITVX. Now, viewership is sitting at just over around half an hour there, but it's a sizable portion of the market, and it's experienced a fair bit of an uptick since COVID, helping to offset this decline in linear broadcast viewership. But it's not just BVOD, we've got another acronym, we've got AVOD. So this is Samsung TV Plus, Pluto TV, Roku, typically US-led services, which aren't experiencing as big a viewership share in the UK, but it is a growing one. Now, with all these different services types, as well as platforms, the market is definitely getting more and more fragmented. From an advertiser point of view, what was previously quite simple is now getting more and more complicated. Audience reach and measurement are now becoming quite difficult challenges. And this fragmenting of viewership is a problem for players, and it comes at a time when fundamental economic growth is becoming somewhat slow. So what we're looking at here is for the UK, it's real GDP growth, so that is adjusted for inflation over the past decade and a half or so. And so in this trend, we see two big dips. One of these is the global financial crash back in 2009, and one of these is obviously the coronavirus pandemic in 2020. Now in 2023, which is highlighted there, we're down 0.3%. Some of this is driven by government cash injections during the pandemic, but it's also the Russia-Ukraine war, high energy prices, and inflation is obviously at high levels. So 0.3% down compared to what would be, I suppose, normal growth throughout the 2010s of around 2%. And this means not just the economy, but the media market is definitely feeling this pressure. Now, this affects every sector differently, and it particularly affects paid services. When you've got all these new services launching and consumers are becoming more and more confused, so what services am I paying for? Where's my favorite content? It's paid services that kind of really suffer from this. They have to continue to differentiate themselves and justify their price point whilst consumer budgets are feeling more and more stretched. And so if we look specifically at these subscription video on demand services, we can see growth has already peaked. It was all the way back in 2019, and growth rates have been decelerating since then. We can see this is going into single figures into the 2024, and it's not really expected to bounce back in the future. A lot of this is that customer levels are beginning to plateau, and essentially the markets are getting more and more saturated. So these services are starting to look for different avenues for growth, and we start to enter this era of hybrid video on demand. So what we're looking at here is, for a number of different video-based business lines, their revenue growth rates year on year for 2022 and 2023. And we can see on the right-hand side of this chart, we've got the maybe more traditional TV sectors, so your commercial broadcasters as well as TV advertising here. And it's a bit more of a negative picture. There's declining growth or minimal growth rates across this. But if we look at maybe online video, what we can see is quite a stark change. Everything is growing quite strongly. We've already talked a bit about subscription OTT, but what we can see is VOD and fast advertising on the far left of this chart is the only sector that's actually experiencing, accelerating growth. And so a lot of these subscription OTT players are looking to take advantage of this and move into the advertising space by launching discounted ad tiers and becoming hybrid services. So when we look at these revenues for VOD and fast advertising, so far in the UK, these hybrid services have made minimal impact, but that's just because they're so new. There's not enough customers on these advertising tiers to drive high revenue. But when we look towards the future, we're looking at around 400 million in revenue by 2027. And this is only actually including services that have already launched. So this is, I suppose, Netflix and Discovery Plus in the UK. So once we start to add on major services that have announced their intention to have ads, so Disney Plus, Amazon Prime Video, this total market, which sits around 1.7 billion in 2027, could easily be pushing above 2 billion. There we are. But who is actually adopting these ad tiers? Well, if we look at the USA as an example, and look at Netflix and look at their sign-ups since they launched this ad tier. In the donut chart, we can see this breakdown of who's signing up to which tier. And we can see around 1 in 10 customers are signing up to the tier with advertising. And if we start to narrow down into just this tier and look at the actual income bands, comparing the over and under index to the average subscriber, we can see this definitely skews towards lower income customers. Now, this isn't necessarily ideal for advertisers, as it's maybe not the best demographic, but what we see here in the donut chart is there's this big basic tier chunk of people. And this has been axed, and so we're going to see all these people having to pick a new package, essentially. And we're going to see a much more diverse mix of people joining onto the advertising tier as time progresses. Now, for these services, when they introduce an ad tier, there's always the worry. You're making it cheaper, you're going to start cannibalizing your revenues. Customers will drop down from more expensive tiers to be on these cheaper models. And what we're seeing so far in the US is that Netflix are actually managing to generate more from advertising revenue and subscription revenue combined than they would for just the subscription revenue on a similar tier. And Netflix is obviously very new to the advertising game, so this is quite an impressive feat at this stage. But this is just for the US. When we start to consider other markets, you start to question whether CPMs can reach these high levels and view times can also. So wherever Netflix does choose to roll out this advertising tier, CPMs will have to be positioned at the very upper limit that a market can support. But there's also got to be a bit of a change in strategy from these subscription video players. At the moment, everything's been focused on sign-ups and preventing churn, but there needs to be more of a focus now on driving viewer engagement. If you have more and more view time on these platforms, then there's obviously more space for more and more ad inventory. Now, so far, I've just been talking very much about the overall, I suppose, more traditional TV style viewing, but what's actually happening with social video? Well, if we start off focusing just on two players which are pushing more and more into the long form and professional video space, so that's YouTube and TikTok. And looking at YouTube first, we can see they've got, in terms of service usage in the past month, it's hitting about 60% of internet users within the UK. So despite all this fragmentation of viewership, YouTube is able to still cut through all this noise and deliver essentially the vast majority of consumers being accessible within their platform. Now, TikTok, being a newer service, has experienced some rapid growth, but it's not going to be quite at the level of YouTube yet. It's sitting at around 21% of internet users have used it in the past month. Now, the interesting thing is when you look at the overlap between these two user bases, a lot of TikTok users are contained within this YouTube figure. So the number of unique users in the 18 to 64 range is only an additional 3% of incrementality there. But what you have to remember is TikTok has a very young core user base. This 18 to 64 range of the survey doesn't capture all of that. TikTok is very big in this under 18 range, and I imagine we'll see a slightly different picture there. And it is this young demographic that's very important when we consider trends going forward into the future. Behaviors that are ingrained in your teenage years are often carried forward into adulthood. And so when we start to compare, say, the top weekly media activities between this 16 to 64 range here compared to the 16 to 24 range, so Gen Z, we can see some interesting things starting to pop out. The first one of these isn't too surprising. Broadcast TV viewership disappears entirely from the top 5. But we can also see that the number of consumers that say they're playing video games is increasing with a reasonable uptick from the total market to just Gen Z consumers. Now, advertisers have already been taking advantage of this new type of screen economy, focusing on video game streaming as well as in-game ads. But as these consumers age up and become more of a core demographic, this is going to become just more and more important to the overall advertising economy. Now, with the sectors that sit somewhere between TV or video and video games, which would be your augmented reality, virtual reality, and maybe the metaverse, we're not seeing consumer uptake really hitting significant levels as of yet. And if there's not consumer really engagement with these, advertisers don't have too much of a space to follow there. There's not enough eyeballs. Now, the final thing I want to mention on this one is that the very top category here is using social media. So with most of all the population and with Gen Z, you're hitting a lot of people there. And Gen Z is almost getting to 100% levels at this point. But this engagement with the platforms doesn't necessarily drive engagement and view time. So consumers are saying they spend similar levels watching free social video as watch broadcaster VOD, and that's across the whole population. So we've come back to this look at view time once again, and we've already talked about how SVOD players are delving into advertising to try and deal with this problem of competition, fragmented viewing. But how can this be dealt with from, I suppose, an advertiser's perspective? How can these platforms help advertisers? Well, one of the wants has been, for the past few years, deduplicated essentially measurement across all these different platforms. So your AVOD, BVOD, linear, all the acronyms. And we're starting to see some developments in this sector. So CFlight is one of these. It aims to marry BVOD data with that of linear, so that'll be Barb. And its coverage is already essentially the whole BVOD market. There's a couple of outliers, so STV and BT Sports, or I suppose TNT now. But it's very good coverage of the BVOD market. But one omission there is the fact that AVOD is not covered. And so if you're wanting to run a complete omni-channel campaign, there's still a slight gap which needs to be addressed in the future. Now, the main challenge beyond this would be that of attribution. You want to know how successful a channel was with the ad campaign and whether you want to continue investing in this channel going forward. So this is a sector which has got a lot of innovation going on in it, and I'm sure some of the speakers later today will delve into this in a bit more detail. So, and now to summarize, the media market is getting increasingly challenging, and it's not helped by the fundamental economic position we're currently in. Subscription video on demand players are very much pushing into the world of advertising to help bolster their revenue growth. And that's great for advertisers, as it means a lot of more ad inventory. But challenges still remain for the ad market as a whole when it comes to both measurement and attribution. And when we're talking about all this data stuff, it's good not to forget that privacy will still present a challenge going forward. So that's everything from me. Thank you for your time. Now, if you want to download any of the slides or data, feel free to scan the QR code or, I don't know, take a picture of the link if that doesn't work. Right, thank you.